Well, I do, Sarah. Your guess is correct. I do disagree with Cathie. Look, I've known Cathie for many, many, many years. Tremendous amount of respect for her. She's built herself a great business, and I have all the respect for her in the world. However, to say that we're not in a bubble, I think is really not paying attention to what forms bubbles, what the history of bubbles, and everything else. There's a difference between mere speculation and a bubble. And people tend to use the two words interchangeably, but there's a big difference. Speculation is actually a healthy part of the financial markets. To really have a functioning market, you need investors, you need hedgers, you need speculators, you need all those groups to make a functioning market. Bubbles are different. Bubbles go outside the financial markets and they pervade society. To say that when we have day traders going wild and we have cryptocurrencies going wild, when hairdressers and taxi drivers are talking about cryptocurrencies, that we're not in a bubble, I have a very tough time understanding that. This is not a financial event anymore. This has gone outside the financial markets.
So if we are in a bubble, as you say, hasn't it already kind of burst? We've seen a lot of these high growth stocks 20, 50% off their recent highs. We've seen a lot of the air come out of the SPAC market, for instance. What else did you cite? Crypto, that also off its highs.
Mm-hmm. So
what happens next?
Everybody kind of thinks that when a bubble bursts, it bursts and it's like over. It happens quickly and it's just over. That's not the way bubbles actually deflate. Bubbles deflate over a number of years. So let me give you an example to support that comment. If you had bought the tech bubble in 1999, 2000, you had bought it 4 or 5 months before the peak of the bubble. So let's say you're buying at the end of 1999. It took you 14 years to break even. It wasn't like all of a sudden everything fell apart. It took 14 years for you to go back and break even. Something tells me that Cathie Wood is not investing saying, it's okay, I'll break even in 14 years. I just don't think that's the way. So it's not like things just happen and it falls apart and there's drama. It's more like water torture and just goes on for an extended period of time.
So it's interesting you mentioned, as we're discussing it, that the ARK ETF is below 100. It's down 6%. Some people think that's an important level. But broadening out a little bit, if you're right and that sort of type of stock and crypto assets are in a bubble and due for a long pullback, will that drag all U.S. equities lower? Would you just avoid U.S. equities until we get through the worst of it? Or are there some parts that you like?
So Wilf, Cathie kind of alluded this, and I don't want to pick on Cathie. That's really very unfair. But I think that she alluded to this, that we've been saying that don't think of the market. Think of the market as a seesaw right now. On one side of the seesaw, you have what I would consider to be bubble assets. She would consider to be growth assets. And on the other side, you have everything else around the world. And I think the point that we're trying to do in our portfolios at RBA is try to be on the other side of that seesaw. There are so many opportunities right now that people are ignoring all around the world. There is literally a world of opportunity out there, but nobody cares because they're so focused on this narrow universe of bubble assets.
So you like all the stocks that she thinks are facing pain? Financial
exactly,
services,
on the other
energy.
side of that trade, exactly.
That's what makes a market. Rich Bernstein, thank you for joining us today.
Thanks, Sarah.
Interesting call.